Okay, now it should be better. Cool, that looks better, guys. Now let's see if it comes up on this other screen. 3, 2, 1. Brr, the money print is going. Okay, here we go. We've got action. Fantastic. Okay, so guys, if you're at home, you might have to press refresh. I'll just type that in the browser. But it looks like it's all coming through loud and clear now for 100 people.
Yeah, it looks good now. I just checked it out.
Yeah, okay. I'll just type and let them know. Refresh. Okay, everyone's telling us it's all good. That's awesome. So, guys, we're here with Kyle again, and we are going to go over the charts. We're going to talk about Bitcoin. It does look like it is rolling over a little bit at the moment. Maybe another low. We'll have a look and pick Kyle's brain. We'll talk about stocks a little bit, maybe touch on bonds. There's just so much news happening at the moment, though, which it's just this other world, isn't it? Like 2020, every day you think, what else can happen? I think I was joking last night. There was a tear gas flavored ice cream in Hong Kong, and that pretty much sums up 2020, I think. So, any just quick thoughts, Kyle, about what's been happening lately before we get into the charts?
Mate, I think oil is the big story for this week. I mean, nothing else has really been happening that I've been really looking at. I mean, Bitcoin's sort of been consolidating sideways in a really important level and doing nothing, which is a bit of a concern. But I think oil is probably the big story for the week that's been outperforming the most.
And by that you mean most people thinking it would go down, and here we are, what, $20-something up to $30-something?
Yeah, well, I mean, WTI, West Texas, is pushing 34 and Brent's pushing 36 at the moment. So oil ETFs like OOO been doing really well.
Yeah. Well, I'll just bring up my charts here. Perfect. Can you see that okay now?
Yeah, looking good.
Cool. Well, we'll just start on the daily chart, and it's 200 or so watching, guys. Give this a like and share it around with your crypto groups. I know it's last minute, but I wanted to jump on because everyone's worried about this Craig Satoshi's coin situation once again. And it's been a while since we've had one of these, to be honest. So, I mean, we'll just zoom out a little bit more to the weekly. But for those that are new, there's plenty of people that have joined us more recently. If you can see these here, this is the first one in the very start of 2017, probably just before it got real public traction and all these Facebook groups and YouTube channels started to pop up. We had that first pullback where people thought, geez, it's got back to its all-time high, $1,300 from way back in 2013. And, that everyone thought another bubble had popped and we had a bit of a pullback. And sure enough, off to the races again. And this was the first one around the hard fork concerns when everyone thought the network's going to split. People can't agree on what they're going to do. And then another big one to $5,000. And remember, we'd only just been at $1,000 a couple of months, 10, 12 weeks before that. So people are saying the bubble's popped, and 2 weeks later, we're down at $3,000. And that was over more, I guess, China concerns and mining being banned, ICOs being banned. We just had it all. And it's always these really sharp sell-offs. Plenty of buyers come in because of the, I guess, underlying fundamentals. None of that stuff changes. And then it was clear that we went into this bear market and unwound. I was one of the people that thought we might be forming a rounded bottom, and then we broke that 6,000 level we'd held so many times. Then once we were down here and we started to form this rounding bottom, then I was more confident, and we did those videos about the Adam and Eve pattern, which we're seeing a lot in other markets now as well. Then, just quickly, we had the big pump, and a lot of people were shorting that $6,000 level, thinking it can't get back through there because support becomes resistance. Huge pump all the way up to 14, and a lot of shorts got burnt, which drove that so high. But I actually think it's really important just to note that this pump here was so strong, and to me that ends the bear market, because a lot of people now are saying that we're still in a bear market all the way from 20,000 back down to where we were. I happen to think that sell-off back down to the mid 3Ks was only because of BitMEX and all that liquidity, that long squeeze. And now we've had this rally that just hasn't really given anyone a chance to buy back in. And I know you guys look at this sort of stuff as well. So the polls on Twitter and in our group, 80 or 90% of people were saying that they were waiting for a pullback. And every time we've had any sort of couple of red days in a row, it hasn't been a deep pullback, and it just hasn't been that obvious entry that people want. And that's where markets are bullish, because there's just constant buying. So at the moment, we're right under this $10,000. It's a round psychological number. I've got lots of messy trend lines on here, everything from the daily to the weekly, the normal chart, as well as the log chart. You can draw it however you want and fiddle around with it, but this is just such an important level, because once we flip it, I think everyone gets really confident, and we can start to say, well, we've definitely got that higher high now and we're in an uptrend. So I've waffled on a bit there with my thoughts. I'll stop sharing. And if you want to go over your thoughts just quickly, Kyle, on what you're seeing on the more recent stuff. But I did just want to get everyone up to speed, mainly because of the Craig Wright stuff. It's not the first time when people are scared that Craig is going to do something. He actually had a lot of headlines around the 6,000 mark when we dumped down to 3. There was a lot of fear that he was going to dump his coins. And I guess these things just come up over and over again, guys. People are always scared that something's going to happen, and there's a reason the market's going to tank, and it's never going to be the same again, and nothing ever happens.
Pretty much, right? It's pretty interesting, actually, what we've been seeing going on. That is for sure, with that with that 90, or what was it? The 50 Bitcoin hasn't been moved since 2009, right? And that actually broke us out of a really bullish pattern, because this is what I was looking at. I did have this drawn in as well, right? So for the top of the ascending triangle, and I actually longed just before I went to sleep, just before that got moved, and it actually stopped me out because my stops were below this support level here. And then there was a really good sell opportunity when we came back and put the bearish retest in, which was just this point here, which is the top of this 9,600 order block as well. But I actually just went long on Bitcoin because we've come back to the major trend support, right? And I mean, look, I might be wrong, but I'm always going to long a bull hammer and major trend support. So I've just taken from the very bottom wick to this point here, which is the most outside, ignoring these wicks here because I'm taking from those two major points there. And then we seem to be bouncing off the trend line here at the moment. So yeah, it's just one of those situations where, it is a bit of a risky play because it does look like it's going to roll over, but I'm still always looking for long positions while we're above the major trend line. If we break below that, there's a lot of resistance. Well, it's currently support. It's going to flip into resistance. It's the major trend line from back here from the 2014 pump. And then also this yellow level I've got in has been a pretty important level for a while now from these multiple touches through here. And then it was an important SR flip through here as well, which a couple of us got a really nice long from as well. So I could see that it being a really nice entry level for a short on the other side if we come back up to that after breaking under it. So that's what I'm sort of looking at the moment. I think this 1 hour looks like it's probably going to finish off closing as a bull hammer. So I want to be long while that's still happening.
Yep. And just for people at home, when we're talking about this, a lot of the time it is more short-term day trading stuff that Kyle's talking about when you're looking at like a 1 hour candle, and when you're diving in and taking a long trade or betting it's going to go up for the beginners at home on this uptrend that he's talking about. That's the kind of the day trading attitude where we're hoping for a bounce because of that trend line. Whereas if you're a longer term trader, you're not making any decisions based off those sort of things.
Oh, definitely not. That's for sure. If you're a long-term trader, you want to be getting in at least somewhere down in here. I think I was talking about this when we were in a boot camp recently with some of the guys. I were talking about when they should get in to their next spot buy, and I was saying, you want to wait for a daily swing low. And at the moment, we're at the top of a daily swing high that's been going on for 2 months, right? You only get a couple of these, every 6 months, right? So you want to be buying when we're getting these daily swing lows down near the RSI. for long-term trading sort of stuff. As you can see, we're in the overbought area. We just come back into the normal trading range on our RSI. So I wouldn't be looking at buying spot until we're getting back around these sort of levels, which would result probably in some sort of a dump. I think if we break this level through here, we're going to come back to about 8.2, 8.400, which might present a nice opportunity for the next swing up.
Yeah, and I think we spoke about this in the last video that in 2017, which we have to remember was a super, super bullish rally. We might not get something that steep, but normally we do have some pullbacks. But in a true bull market, like we've seen recently, there hasn't actually been pullbacks and that's when, for a lot of people that are just getting a position, dollar cost averaging in is fine if you're taking that really long-term view, because there's no gentleman's entry, as I say. And when you do that, poll on Twitter and in our group, and 80 or 90% of people were thinking that price was going lower, because everyone, when we had this sharp sell-off, a lot of the traders were saying we're going to get a bounce and we're going to roll over again. And 3K, 2K, 1K, all these numbers were being thrown around. Mm-hmm. And it's really hard for the beginners and the people getting into the space to just jump in and say, well, no, I'm going to be confident that we've just had a big sell-off and we're going to continue higher. And I guess that's kind of like the market internals, which you can't really show with an indicator or anything like that. It's more the sentiment that I talk about a lot, where we're seeing a lot of people buy some big OTC orders. I think we were saying the other day, six people this week buying $100,000 or $200,000 worth of Bitcoin, which we haven't seen for a long time. It's just the constant sort of buying from exchanges and brokers, and that can be sometimes just reflected in the charts, where every time there's a big sell-off, and we've seen this a lot lately, like really thin order books, or I'm not sure if it's just because a lot of people are still watching BitMEX, but a lot of traders and liquidity's gone off BitMEX, but we're getting these big sell-offs and these big long wicks, and then next thing you know, it's bought back up.
Yeah, 100%. I think that is a massive issue right now in the whole marketplace, because BitMEX seems to always be the market leader in terms of price action, right? And now, because BitMEX has lost so much liquidity just from traders, like, you look at those charts, they were like 60, 70% of the market for futures, and now they're only 20%. And so when we have those bigger players get liquidated, there's not as many retail traders there to catch those wicks, and they just go so much further. I think that's definitely a shift that I've noticed in just the price action since the massive sell-off, the 60% or whatever, which, like you said, is a hard one to buy in on. But what we're seeing is people who haven't been in the market so much, but newer people get really interested now when we have those big crashes. Like Edward Snowden came out and he said he was buying more Bitcoin around the 4K mark. And then we have everybody who's like a crypto trader, and they're like, no, it's going to 2K, it's going to 1K, and everyone's super scared and in fear. And you were actually one of the first people I noticed to get bullish on Bitcoin when we were just above 4K, and most other people were saying we're going to roll over for another dump. And you were one of the first people who were like, nah, this is an entry. I think you nailed one. It was a really nice pullback to 6.8, and that was actually super low. And I remember you caught that trade. It was pretty nice.
Yeah, I think a lot of the more institutional guys, like a Paul Tudor Jones, I noticed Robert Kiyosaki, and a lot of people now are sort of starting to drop Bitcoin in their media appearances along with gold, because everyone's talking about money printing and QE. And guys, if you haven't watched the interview with Brett Johnson we did yesterday, it's just absolutely brilliant. But Bitcoin is just working its way into these conversations, and when we have like a big dump to 3,000 that gets aggressively bought, and we've just had this sharp rise for 7 weeks, that gives those guys more confidence to come out and say that, yeah, I took a position, rather than the other way around, when there's possibly a big correction looming in the next few weeks, or we've been in a bear market. No one wants to come out and talk about it then. So it just builds this momentum, and we've started to see it, like the AFR covering Bitcoin. I just think we're kind of at that point now we can start to be fairly confident that we've got a low in. I don't think we're going back below 3K, and it's just everything's heading in the right direction.
Yeah, I definitely don't think we're going to see 3K. I don't think we would have seen those sort of levels for a long time, just looking at the price action of the market, unless we had had that global insolvency event, which everything had a huge dump. I mean, it's like the same as gold. It's like, do you think gold would have gone down to 1,300 or whatever it was if there was an insolvency event?
Yeah, I mean, even this is something we've been talking about a lot, the GDX and the GDXJ. So if you have a look at their charts here, guys, the drop down from nearly 32 down to 16, so a 50% drop. And then when you look at GDXJ, which is the juniors in mid-cap index, what's that, from around 47 down to around 20, so 60%. So when you are looking at this number, you can actually look in the information about these ETFs, and it tells you what they're holding compared to what the price of the ETF is. And I think someone posted in our group today that they were actually trading about 30% of the actual net asset value sort of thing. So it was literally just these liquidity events and margin calls and forced selling, because no one's going to sell something at this price when they know that all the stocks they own and the actual value of the ETF is far higher than that. And look, it's just rebounded there straight away. So it's just crazy that this stuff can happen. And when the SEC says Bitcoin's too volatile, price control, we can't have an ETF. And you look at something like this, one of the most traded products in the world, can go down 60% and be back there a few weeks later. The mind boggles a little bit.
Pretty much.
Just quickly, while I got the charts up, let's have a look at the US market. So this is something that I've been trading a little bit lately as well. This is the level where we had a couple of bounces right into that fib zone and a couple of nice short trades. This time it's hovering right around there, and I kind of think that, if you extend this out, you could argue that it's broken through now and come back and retested it, and this would be bullish to continue higher. But I think the parallel universe that I talk about with stocks and all those companies that are just facing payments coming up, they've got no customers, the revenue's down, the earnings down, we know all that stuff, and yet the market's just going the other direction, because the Fed have tried to make it very clear that no matter what, they're going to have the markets back and they're going to print money. This week, or last week, sorry, they actually started buying ETFs to the tune of hundreds of millions of dollars. Mm-hmm. So people have that in the back of their minds. And I think I put something out on Twitter recently just showing the huge growth in the number of accounts at E-Trade, Charles Schwab, Robinhood. So all these ones in the US where they've got this free trading, and the number of retail accounts and the stocks that they're holding, it's just all gone parabolic lately. So people have got their $1,200, and some have bought Bitcoin, some have bought stocks, but people are bored at home, and that's when gambling and alcohol, cigarettes, and obviously stock trading is a form of gambling now. And I just think that it's just not healthy market fundamentals that are driving it higher.
Yeah, you put up a post about something along those lines, that a lot of them are buying ETFs, leveraged ETFs, that were going to probably put them in a pretty bad position on the next downswing, which is going to be something to worry about, that's for sure.
Yeah, just quickly for people at home, what Kyle's saying was, when, let's say that gold starts going up like it is now, so the retail investors think, well, how do I make more money? And they hear about gold stocks, and then they hear about that ETF that's easy to buy, and then they Google and they find out, there's a double leveraged or triple leveraged ETF. So it's the same as what happened the other day with Binance listing those leveraged tokens. People think, double or triple, that's better, and I'm just going to hold it. Doesn't matter if it goes down a bit next week, I'm just going to hold it because I think gold's going to be higher in a few months or a few years. And they don't realize that anything that has leverage, it has decay. So every time, like the oil ETF, when you have to roll over these contracts, that has a cost, and that leverage sort of eats away at your investment. So people that don't know all this, and I made this mistake when I first invested years ago, buying these things and thinking that you just hold them and wait till it goes up and you're going to make heaps of money. But it's almost a surefire way to lose money, and they're probably meant more for trading, or definitely advanced investors. I just wouldn't touch them if I'm a beginner. But unfortunately, I think the stat was that 2,000% more people were buying the double leverage junior ETF than just saying, I might buy some gold stocks or just the plain gold miner ETF. They complicate things, and even if gold goes up in a few months' time, they'll probably still lose money. But anyway, that's just another story.
Yeah, pretty much that's what's going to happen. So it's going to be interesting to see how it plays out. But I think, a lot of people are just expecting the stock market to roll over. And I've sort of had this theory for a little while now. It's like the Fed and, obviously Trump's putting a lot of pressure on them as well, is to make sure that the stock market doesn't completely collapse while we're in lockdown. So I think definitely, like that, the head and shoulders play that they had up the other day, that ended up just, wicking the low and then launched straight to the top of the channel and took out everyone's stops. I don't know, to me, that was just so obvious, just basing that on just like the market sentiment.
Do you want to show people what you're talking about?
Yeah, sure. Just get it up.
So we've got 500 watching now, guys. Thank you. If you all smash that like button, and don't be afraid to drop this in your crypto chat group, your Facebook messengers, because I know I did leave this a bit late, last minute, sorry.
Yeah, so this is basically a really good pattern that most traders don't have, actually. I got this off Trader Dante. If you ever watch this, mate, tip a hat to you, because it's a really good strategy to trade counter trading, right, against a really basic setup. And it plays out all the time, especially when you're trying to, in a counter trend setup like this, right? So obviously we bottomed out down here, now we're heading up, putting a higher high, higher low, right? And now it's moving higher. And, just such an obvious place to put in a head and shoulders pattern here and suck everybody in. And, most traders play the game quite competitively. So, the guys at BlackRock, they're probably thinking, how can we suck as many people possible into shorting the market so we can swing it back on them and teach them a lesson not to short this market while we're still in lockdown, would be to set up probably the most known pattern, which is a head and shoulders. And everybody that, saw all this, right, saw this massive dump and they didn't get a chance to get in there. And then they tried to get in this one here. They didn't get a chance. They got stopped out then as well. They're seeing this huge downside movement. They're like, oh, this is my chance to get in, and so I can, have the hero short and tell everyone I shorted the great collapse of 2020.
Yeah, well, I think you could even argue that the bottom was an inverse head and shoulders that they put in there.
Yeah, true, for sure, right?
And then that played out. But what you've got there, again, that neckline, you've got the two sloping lines. You could probably argue that it did break down, but then it was people that were getting a bit greedy or were playing the actual horizontal, the bigger head and shoulders, if you want to argue, because it didn't quite come down to that neckline again, did it? So it's not perfect,
yeah.
but
in stocks, it isn't.
Yeah, and people got greedy. So what we're saying, guys, is a lot of people got short and piled in their bets thinking, oh, it's going to break down really nastily when it already kind of broken down a fair bit. And so what traders can do, and who knows if the Fed or whoever, they can see these positions and they know there's a lot of retail traders, or they can see there's a lot of commercial shorts. And as soon as they can move it up, they know it turns into a short squeeze. And next thing you know, they've squeezed all the way back to this level that I've been talking about, that we've touched a few times now, which is 61.8% fib retracement from the entire move.
I'll put it in so everyone can see.
And the Fed have gone really hard. They have put a lot of money into the markets, like tens of trillions of dollars, and it's still not enough. If you believe in what Brent and I were talking about in that interview the other day, the amount that they need to print to satisfy the amount of dollars that people around the world want, not just in America, and all the corporate loans that are looking like they're going to default, all the debt that needs to be paid. They need to print tens of trillions of dollars, and that's a big number. Like, look at the headlines and the money printer go brr, and Bitcoin, quantitative tightening, Bitcoin's doing the opposite. So all that stuff was in the news and starting to be spoken about because they had to do the biggest stimulus ever, which was $3 trillion so far, and the government's spending $3 trillion as well. But once it becomes obvious to people that the next step is an order of magnitude bigger, and people start to say, well, hold on, that debt is 100 trillion of unfunded liabilities, and global debt is now up to 300 trillion. People go, my gosh, like, where does this end? And I'm sitting here watching my Aussie dollars get eroded because Australia's probably going to end up having to do it, just like everyone is. It's a currency war. More people than ever are just going down that rabbit hole and saying, what's going on here? And they're sitting at home on the couch and seeing it on the news, and maybe watching YouTube. And I know, like, the US channels have been growing a lot. We've been growing a lot. So people are definitely interested.
Yeah, 100%. I mean, just chatting to people who have never had any interest in the economy and stuff like that, flick, like people who are nurses and stuff like that, flicking me messages and be like, oh, it's so interesting. I've never been so interested in what's going on in the economy than ever before. I think it's just sucking people in, and then that's how they end up coming down the path and discovering crypto and realizing, there is almost an alternate financial infrastructure being built in the background by some of the smartest people on the planet. So,
Yeah. When people say they can't understand Bitcoin, you can give them the real basic definition of, oh, it's a digital money, but to try and explain it to them, they can't really understand it if they can't understand money. So if you're trying to argue, oh, it's scarce, people don't care. You say, oh, it's not backed by anything, but they don't know that money's not backed by anything. They don't understand that we're not on a gold standard. You really can't explain and get someone to truly understand the concepts and why they're so important if they don't understand banks, debt, and money. So that's why the actual Bitcoin journey does take a while.
Yeah, definitely. I think the easiest way that I've ever had it, get across to somebody is just explaining it to them that instead of putting your capital, your money in a spot where it relies on governments and banks and people, you're putting it into a space that relies on computers and algorithms that can't do something to screw you over for their own, favor themselves over you or rip you off because you're trusting an algorithm that's just programmed to behave in a certain way.
Yeah, and then they get into the weeds and they say it's not backed by anything, and where is it? And it's like, well, you can make all these arguments about the internet, but like, why is the internet valuable? And can they shut down the internet? Not really. Anyway, that's another path. I'll have a quick read through the comments, but is there anything else you want to chat about, Kyle? I'll just have a quick read through while we. Any other charts you want to look at?
We'll quickly look at the oil chart. Let me just. Whoops, wrong button. Here we go. Because we were talking about oil earlier. So this is the Brent crude oil, which is basically like European oil. And obviously that had a pretty big sell-off. We can see we've got this entry candle in here, which I didn't take actually because I wasn't really looking for it at the time. But that's a pretty nice entry candle, the bull hammer on the daily. But if we go and look at the West Texas, we can see this is, back when we went to a negative. And it's just had a massive recovery. So I know a lot of people have been jumping on like oil stocks and things like that and played this pretty nicely. But this is sort of what we've been looking at the moment. And I'm not sure if a lot of people caught this or not, but basically had a really nice pump. And then this was a super obvious trade. Huge rally into pretty much basic bull flag and then broke out the top of that. Gave you another opportunity to get in here on the retest, and then it's been pushing. So it's been pretty much most of the week that we've been running off. So I think that's the biggest story for the week, 30% push in oil higher. And I don't know, I think a lot of people jumping on ETFs and stuff like that at the moment, trying to play this oil play. And the OOO, the beta oil ETF has performed pretty well recently, and that's up, about 23%, but it's still lagging the move in the actual oil price. So it's going to be interesting to see if this catches up. I'm not really a big ETFs trader or anything like that, but just been watching that. And I think that's probably the main story of the week from my end anyway, because Bitcoin's been pretty flat. But yeah,
okay. I was just looking at some of the questions people were saying about how much of your wealth have got in assets, and why would you keep buying the dip and that kind of thing. I guess for me, you've got to have, if you're going to trade, a separate account and not really think of it like that. You can honestly, in my opinion, this is just me personally, putting a percent of your wage or your earnings or your business, whatever it is, into Bitcoin all the time, it's not really like, oh, have I got enough in Bitcoin as an investment? For me, like ultra long term, I believe it's the hardest money. So whenever we have a dip and you buy a little bit more, people say, well, aren't you happy with how much Bitcoin you've got, and why did you want more? Well, when something goes down 70% in a few weeks and you think it's a very valuable asset, look at what's happened. That $4,000 Bitcoin buy is already doubled your money. And where else does that happen? It just doesn't happen in stocks or whatnot. So having a little bit of money always on the side, only as a rule you might set to only buy bargains or only buy when there's blood in the street. That's the way to think about it. Don't ever complain that you get a sell-off and say, oh, I've already got enough of this. If you really, really like something and you genuinely believe that it's probably even just going to bounce as a trade idea. You might have your trade account and then your investing account.
Definitely. And also, like, a lot of traders take profit at certain areas and points as well. So it's reinvesting back in. Or, the other thing as well, even if, the other sort of trader only just hodls, you might be getting long on leverage. So, like if you're trading on BitMEX or something like that, or, FTX, a lot of you guys are on at the moment, you're using the current Bitcoin holdings that you have as basically margin to re-long, and so you're buying, but you might not be buying spot coins, but you might be buying a position, and when that goes up in price, you actually get more Bitcoin back, and then you do whatever you want with that.
Yeah. And the news today, I'm not sure how much you read about the 50 Bitcoins moving, but I mean, from my understanding, there's a lot of arguments to be made that it's not Craig Wright, but it was an address he has listed in the Tulip Trust. So even if you are a believer, and there's always one or two BSV guys in the comments and that, at least we are going to have some clear answers, because now that that's happened, I believe that it's probably an early adopter or a miner or someone just moving some coins. I mean, why would you send 10 coins to Coinbase? To sell. I think they used another coin payments or something as well. Anyway, it might be a cheeky little, hey, this isn't Craig's address. It's just a way to signal that to the judge and whatnot. Other scenarios are that it's someone very early on, the Kleiman estate has got keys, or maybe Craig, even if Craig moves it, there's arguments to be made that he might have got keys from someone else. Yeah, we just don't know. Or it could be someone that's actually being very active and moving coins the whole time. But the way that a Bitcoin wallet works, a lot of them, they'll spend the smallest outputs first. So you might have had those coins all along and been using your Bitcoin wallet all along. But this is the first time your wallet's had to use that big UTXO, that output. So everyone looks at that one address and goes, oh, it's moved. But that might be part of 30 or 100 addresses you've got in your Bitcoin wallet, and that the wallet picks which one it's going to use to send a transaction each time. So it's very interesting either way, and everyone's got their own theory. But I just think it's so funny that it's timely. After all this happened at a specific time last year, when we're getting right to the apex of a pattern, that descending triangle over a year ago, now it happens when we're like right there and everyone's waiting for a pullback. Oh, we're going to break 10,000. We've just had the halving, and something that's big and controversial like this happens. And it tends to just shake out the beginners and the weekends, unfortunately.
Yeah, I mean, a lot of people were getting pretty scared when that first happened last night. Everyone was spamming me like, oh my God, Satoshi's moving his coins.
I was asleep. I must have just gone to bed. What time did it happen?
I think it was like 1:30 a.m. or something.
Must have just gone to bed. You guys have seemed to be staying up a lot lately. We wanted to get Troy on as well, but Troy might be catching up on some sleep. Is it 2 hours ahead in New Zealand, or?
Yeah, 2 hours ahead of us. So yeah, I don't know. It doesn't look like, from his posting schedule last night, it doesn't look like he got much sleep.
Oh, okay.
I think he was expecting a huge capitulation. But yeah, we'll see if that comes or not. Okay. I think if we are going to collapse, it possibly might happen over the weekend. We might get a dirty big sell-off when there's no liquidity, like we did 2 Sundays ago. So if we're going to break down that trend line that we're pushing into at the moment, that's a big thing for me to watch. And then that key level at 9,150. If we start getting underneath that, that's when it's like danger zones for me to start taking some spot off and look to get in again back lower. But I won't be doing anything crazy though.
No, I was going to say, yeah, order books are thinner on weekends. Everyone knows that we're watching that trend line. So when we do break it, there probably is going to be that cascading effect again. Maybe that happens on a weekend so it can move the price more. But I definitely think, oh, Troy, let him in. I definitely think you're right that everyone wants to buy this dip. So, Troy, welcome.
Good timing. Sorry, guys, you did it right. I was asleep. Disease.
That's what we thought. Do you want to add anything on what you're watching? Maybe the cloud or something different that we haven't touched on?
Yeah, so I'm not too sure what you guys have covered just yet, but we can go over some stuff real quick. Maybe just some basic fractals.
We just had a golden cross as well, actually.
Do you want to share your screen? We're on the other camera at the moment, looking at the side of your head. That's all.
Oh, okay. Yep, sweet. One moment. Where are we? We're over here. Cool. So you can see that, guys?
Yeah.
All right, sweet. So I've got a few fractals I'm watching. I'm a bit of a fractal trader, so patterns within the market. Anyone who follows me will know that by now. So we'll just cover a few that I'm watching on the larger scale. I need this chart up here. So I'll pull this one up there first. One moment, sorry guys. Here we go. So I use this thing on the right here called the object tree. If you don't use that, I'd recommend looking into it. And what you can do is have all these different trade ideas on your screen at once. I'm going to zoom out a wee bit on the look at the daily. All right, so we can see there's a pretty clear kind of pattern playing out here, right? And most people are looking at this at the moment. It's a right angle broadening wedge. So I've got different versions of them over here. So we'll go through those real quick. They're just all macro players that seem to play out over and over again. So there's this one here, which would be a large broadening descending wedge, right? I don't think that's going to play out, but it'd be fantastic if it did. If we do end up down here again, there's going to be some kind of crazy event to cause that, right? Satoshi moving his coins could have been one of those, because people would freak out thinking, oh my God, there's access to the original. Then you've got the diamond reversal, which is another one. Price seems to do exactly as it states in the name. It's a reversal pattern in the shape of a diamond. So far, we are getting resistance here. I did this about a month ago, so it's still somewhat accurate. I just keep a note of these because these fractals play out all the time, right? Then there's the cone version of the broadening wedge, which just means we should continue rallying up here. We'll see a resistance here, all right? And then another one, broadening descending wedge, this is what it should be doing here, right? Because this is the original here, and the liquidity grab was down here. That's the exact pattern that actually played out to get us to where we were. So I can quickly cover that one if you haven't covered that yet, guys. Have you guys covered that yet? The broadening descending?
No, sort of got a touch on it, but not really.
So I'll show you how I trade this, because it's a trade I actually mapped the entire time, but I didn't take the trade, but it played out perfectly, right? So you've got a wedge that broadens in nature like this. There's a massive liquidity grab, a capitulation. It's like a bump and run bottom, right? Then you also have the targets of this though, which comes from the broadening descending wedge. So you've got the high here and the high here, your second and your third touch there as you come down, right? And we can see that's exactly where price ran to over here and has since rejected, right? And then if we cross-reference this target with this bullish pattern that we had to play out with the CME chart that everyone watches now, right? There was a massive gap over here and price, right? So they never quite closed that gap. So if we go ahead and pay attention to this chart and just use a horizontal line array and go across from the bottom of this white candle where it closed, right? You can see that was the exact top of the Bitcoin run after that bump and run bottom was put in. Where we go back over here, I think. Yeah, so exactly where we ran to, this pattern, this macro fractal that played out, was actually a perfect target of the CME gap here. So it's quite an interesting correlation there that was quite possibly going to happen like that.
Yeah. I was going to say just another fractal that we're talking about was when Bitcoin put in its major bottom at 3,200. And once we came back and got to the second test, that's when I did the Adam and Eve explainer video. We're trading for 3,400. And I think it was the day Louis was born or a week or two after. He's very lucky. Yep. He got the dollar cost average in at almost the bottom. My son. So his first Bitcoin. But so that was a pattern that was, people weren't really talking about it. So you'd say it was lesser known. Whereas when everyone was talking about the head and shoulders recently, like we've already touched on, that's when things are maybe less likely to play out. But what we've got going on at the moment is the opposite happening at the top. So I think we could have an Adam and Eve, which I think we have marked.
This here?
Yeah. On a different time scale, but that fractal.
That's this one here, yeah. So I've been watching this as well. Now that the descending triangle has failed here, when a bullish pattern fails at resistance like that, you should start to be a bit cautious. But this could also just turn into a larger pattern, right? Because until we lose that trend incline coming up through here on the log and the linear, so we'll just grab that and bring that up. Until we've lost that, this could just become a larger ascending triangle, right? It could bounce off and wedge through. We also know that there's a CME 6-month contract close in 6 days. And if you've watched price before, when these 6-month closes come in, it gets very stale for about a week into the close. So we could just see some dirty chop backwards and forwards, just like we have been. I'd say like the 1 hour. You see these typical Darth Maul candles and breaks out either side, and it's just any high leverage traders are just getting absolutely wrecked through this price action. But we could see this go on for another week, right, and fill this gap here.
The last thing I want to just show, if you want to go on a weekly, there is a chance that the whole entire pattern for the past couple of years is a instead of an Adam and Eve, an Eve and Adam, where we have more of a rounded and then a retest, and as long as it's within 10 or 20% the bottom, that's also possibly a valid pattern. But just something to think about, yeah. If we have that continue to have a sharp sort of continuation higher, it's just a double-ish bottom. Something like that. For sure.
It's quite possible.
Now, someone's just saying engine is pumping. So if we want to have a look at that, I know that they've... I did an interview with them last week, and I know that they've been... a lot of alts have been trending up, so it depends what you mean. Sometimes someone says pumping, and it just means 10%, but lots of alts are starting to look pretty good. And I know there's lots of alts that are having good news announcements or mainnets or upgrades or partnerships, so it's all sort of starting to come together.
The alts are definitely having their moment. I'm a little bit concerned with Bitcoin dominance. That's coming down to support heavily now. And we saw this very similar in 2019, where alts were rallying, and then Bitcoin dominance in Bitcoin started to get to a point where it's going to break, and then just completely destroyed alts for about 3 months straight. With Eng here, I'd be just watching this particular candle, guys, on the weekly, if you are trading this. If the weekly on Monday closes above this candle, we could see some intense further upside, right? Because this is the, on the weekly, the first troubled area of this entire run.
Yeah, it's a pretty nice order block in there. There's not much else, is there?
So if you were to go up the daily and have a wee look, you're going to see this massive cluster here. So if price can close above the cluster, which you can minimize to just a single block on the weekly, if you close above that, I think there'll be further continuation, maybe like a blow off top, because that's getting pretty parabolic now, right?
Yeah. And when you think about these things from the fundamental side, you want your project to have made progress from where it last did that, call it a block or call it a weekly candle, whatever it is. That's where the fundamentals overlap with the technicals. So does it deserve to have more users, more investors, more people aware of it, a larger market cap, all those kind of things? And if it doesn't have any of that, if nothing has changed, that's where you're more likely to be buying a pump and dump or something, because there's no reason for it to go up. It can fall back down to wherever it started because nothing should have taken it higher.
It's pretty interesting that Bitcoin and gold are both putting in Adam and Eve top at the moment.
Yeah, pretty interesting. It's a very interesting thing with Bitcoin. So if we look at this particular pattern here, it looks like a bit of a broadening ascending wedge. I'll just see if I can draw that in. Through here, this particular pattern, right? And then usually you get a third move up or something like this. We've also got that ascending triangle that somewhat played out through here, right? Clean that up. What I found with Bitcoin is, just from a fractal point of view, a patterns finding thing, is you inverse this chart and we go out to the weekly on Bitstamp. See that? So this pattern here, right? It's just the same as previous patterns like this one here. And it comes back and does these kind of bottoms, right? And it just whipsaws backwards and forwards through the same price action. And it's done it since forever, right? There's another one here, here, now another one. We had them back here as well, all the way up here. It's just a very common thing for Bitcoin. It just seems to whipsaw in a range for a while until it breaches. So now we've got that halving out of the way. Maybe we're going to get our 4-year golden bull run, but I'm not sure, because it's just whipsawing between this. You can even see it just looking now. This is the right just through here. It just does these patterns in and out of this particular line, like it did back here, right? So just a fractal, they're just repeating.
It's definitely a key level.
Well, guys, anything else just to wrap up? I didn't want to. We've been on for 45. I didn't want to make this a long one. We've been doing a lot of long interviews lately. Someone said, "What's an Adam and Eve?" It's just a type of technical analysis pattern. You can Google it, or if you're in our group, I've done detailed rundown of it. Someone said where to follow you guys. So Troy and Kyle are in Crypto Paradox is the Facebook group, and what's your one called, Kyle?
Market Mastery.
Market Mastery. They're on Twitter. They're in my group as well if you're in that.
YouTube as well. Follow us on YouTube. We just started our account on YouTube, actually. Market Mastery.
Okay, I'll put the links in once I get a chance to edit this video. Once YouTube has to render after a live video and update it, so it'll all be done within a couple of hours, guys. But anything final thoughts, guys?
Yeah, one thing I wanted to let everyone know as well is we did just close a CME gap for this week, which was at 9,300. So that just closed on this last pullback just then. So it's going to be interesting if that's going to end up resulting in a change of direction.
Fantastic.
Like the previous one. So
I'd probably say just with the 3-day close, we just had the swing high, right? Came up and swung this high, but not the final high. And we've got a bearish cross here. So when you see this kind of price action from an Ichimoku point of view, you should expect volatility here, right? And we got volatility as soon as we hit this particular point. We got the news that seemed to perfectly go with price, right? That was a perfectly timed, based off technical analysis, a perfectly timed transfer from an old wallet. Go back to this and let's go to the daily now. The daily is actually really bullish. We're above the green cloud, so this is technically the bullish cloud. And we're above these, and this is above price. So daily Ichimoku is actually very bullish. Whether they pull back, there's still a lot of room to stay very bullish here.
I could easily see a pullback to like mid-8s, like 8,200, which lines up perfectly with that level there on the cloud. So I wouldn't rule that out. And that would make sense as well for the broadening descending wedge to have that pullback underneath the major support just before we break out. And it'll give us a chance to reset on the daily as well. So
I agree with that, completely. Yeah. I think this level on the daily here is pretty key if we do end up coming down.
I just think that the survey we did the other day with 80 or 90% of people, and just the action, it's what's happened in recent weeks has got a lot of people on the sidelines with more money at a time when there's some new people coming in. There's not a lot of reasons for whales or miners to be selling anymore. We've seen that Cash App and Grayscale, these guys are soaking up so much of the new Bitcoin and ETH. It's all coming together, I think, to start to work our way into the next super cycle.
Yeah,
for sure. We might also be building a falling wedge at the moment as well, which is sort of what you're looking at there. Yeah, that might be the new pattern to come in, which is sort of why I'm thinking there's a possible pullback to low 8s and then another rebound out of that. So just have to see and wait and just play what the market gives us. You know, if anything, I can say to the guys, just try and follow the trend, trade the trend. Don't be trying to short while the market's moving up, and focus on longing. And then once we do break key trend lines, we start putting in lower highs and lower lows, then the trend is flipped. Then you start looking for downside movements. But yeah, just don't get caught out trying to counter trade and be the hero, because it's not going to be your friend, that's for sure.
Yeah. Brokers, guys, FTX is where I do all my trading. For brokers for buying coins, you can go on our website and have a look in the comments. Someone say TA is witchcraft, and someone else is saying that you're spewing out too many charts and too many patterns. So, Troy, next time we'll try and keep it at a beginner's level, because I do know what you mean. There's a lot going on in a short period of time.
All good.
But, hopefully, guys, that is enjoyable for everyone else, and it wasn't too much chart spew, as someone said. And, I'll talk to you guys again soon, and members will post another update in the morning. So, thanks for joining us, guys.
All right, cheers, Nugget.
Too easy.
See ya.
See you soon, guys.